News out of Australia yesterday that the Reserve Bank of Australia has held its equivalent of the overnight cash rate at 4.25%. This went against market expectations, where most analysts had expected the Reserve Bank to reduce the rate by around 0.25%. The reasons cited by the Reserve Bank were that there is increasing optimism coming out of Europe, and this has allowed most of the Australian banks to raise funds more freely out of the European debt markets. On the other side of the world, also some good news. It would appear that Greek leaders may have actually managed to cobble together a deal which will satisfy both European leaders and its debt holders. So in terms of this news, what effect did it have on markets? Well, looking at the Australian news first, it had a significant impact on the Australian dollar, which rose against most trading partners, including the New Zealand dollar. At one point it was up by nearly 0.5 cent, but has dropped back slightly since then. In terms of the optimism from Greece, that's had a significant impact on equity markets across the world, with the Dow being up nearly 40 points and European markets also responding upwards. Sometimes it's nice to know that Australia and New Zealand aren't the only countries in the world that experience the vagaries of the weather. You see, there's been a drought in South America, particularly in Argentina and to a lesser extent in Brazil, and that's had a significant impact on their corn production. These two countries together produced nearly 20% of the world's corn production. And in fact, in the current year, it was expected that that might reach up to 28%. However, the drought has really knocked the stuffing out of this, and it's expected that in fact the corn production will fall by nearly 20%. There are likely to be beneficiaries in New Zealand out of this news, particularly in the cattle space with beef farmers. The reason? In the US, a large proportion of the beef herd are fed on corn, and the shortage of corn is likely to have an impact, therefore, on the price of beef in the US. This doesn't mean that New Zealand will have open access into the US beef markets, however, because it appears that consumers in the US are already up to the tilt in terms of the prices that they will pay for beef. However, it will make New Zealand exports into Asia relatively less expensive compared to the US product, and this can only be good news for beef farmers.